Hello, greetings, and welcome back to the BFC, where we get into it and go to the trenches of the trading world. And we have a lot of great guests today. It's going to be a fun show. But before we go any further, guys, smash the like button. Sometimes we have hundreds of people watching. You got to smash that like. Let's get these algos up and let's build our community. And also, just to let you know, we have like 60-mile-an-hour winds up here. So if I lose signal, yeah, I'm going to hop on my phone and we can make it real awkward. So, yeah. Yeah, we have a packed show. So let's get right into it. All right. I first want to start with Idkff. All right. This has been very exciting these days, watching what they're doing. It's an investment, I guess you could say. Let's move on.
That's hot.
Yes, it's a very hot share structure, Paris. Thank you very much. So right now we have a market cap of 11 million, and the unrestricted is 51 million, and held at DTC, updated on May 31st, is 3.7 million. This thing does move very, very easy, and the float last updated on February 28th is 25 million. So let's just keep going here. All right, most recently, it's quarter one. As of March 31st, 2024, the company had cash, investments, and digital assets of 49.7 million. And when you look at that share structure and you look at, well, I'm going to show you the chart in a bit, this thing is completely undervalued right now, and they're just getting cooking. They have a lot of great investments, and they've been on the show. Like, we've had a great sit down with the people from 3D Capital. So you're definitely going to want to, I asked them to come back on. We actually just did a spaces with them. So if you're on the Twitter, the X, or whatever you like to call it, make sure you hop over there, give me a follow, and check out that Twitter space. I actually did that one with Stock Picks NYC. So, and there was a lot of information that they shared. So, and they were on the show. So let's check something out here from when they were on.
We have in 3D 280 million notes. Those notes, we believe, are going to get redeemed over the next coming years. And we believe that that's going to be cash flow to 3D that we plan on distributing a portion of to shareholders through some type of dividend.
Through some type of dividend. So this is a long-term play. I think this thing's going to pop eventually. I do. And they already had a nice little run. I mean, we're going to look at that in a second, but this thing looks great. Dividends, count me in. These are serious stocks. And I'm not bashing 000 stocks. I love a good AAA. You guys know that. But this has a nice share structure. And not only just that, they have all their ducks in a row when it comes to investing in these companies. And that's sort of the challenges for this one is like, you can't ask them, oh yeah, how's this going with the investment? It's sort of like we're both in the same boat with these guys because they're investing in these startups. And some of these startups are slated to go big board very soon. They're set to IPO. And he's talking about these notes that they're going to get and be able to convert to dividends for Idkff shareholders. The guy's done it before with a different company. Pretty wild stuff. 3D Capital announced a settlement of dispute with Palisades Group. I think that's how you say that. Palisades Group, a Gold Corp. All right. As part of the settlement, the defendants agreed to provide a total of 3.75 million common shares in NFG to the plaintiffs. Palisades, I'm really having trouble with that one, will transfer 3.38 million shares to the plaintiffs, and NFG will issue the balance of 370,000 shares, the latter of which is subject to approval of the TSX Venture Exchange and the NYSE American. Okay, so they're going to receive 2.89 million. All right. NFG or NFGC stock, this is not National Fuel. All right, so don't get confused there. NFGC, the stock is worth $3.14. All right. Think about that for a second. Going back before the settlement, the unaudited net asset value per share was 72 cents. Now we got to sort of put things together here. All right. 2,892,863 shares times $3.14 is $9 million. $9 million. And the Idkff market cap right now is at 11 million. Put that into perspective for a bit. Remember, I talked earlier about they have tens and tens and tens of millions of dollars already in investments and assets. To me, this one is a buy. I'm going to pull up the chart right here. Here's the Idkff chart. It's bottomed out. There was a lot of selling going on. It went on a little nice tear. You could see the volume is increasing on this one. I think it's just a matter of time before it pops. And we had the bottom marked at 19.24. But I think this is, if you're looking for a medium to long-term hold and you want something that's going to pop and give you dividends, I like this one. Remember, this isn't financial advice. This is just me sharing my passion with you. So that's what I feel about Idkff. All right, let's get into the next one. NUMD. All right. This one is very, very, very exciting for me. I like this. I'm a real estate agent and it's a real estate play. So for me, all day long, give me NUMD and let's talk about it. All right, they're sitting at 6 cents. Another gorgeous share structure. Authorized share count of 90 million. Market cap of 4.4 million. Right now, held at DTC, about 20 million. Float, 27 million. OTC QB, it's a shell risk, but it's not because they just got through that reverse merger of Your Space America. And by the way, there's only one convertible note for this company, and it is YSA, Your Space America. The merger's done. I've been in contact with the company. I would love to have the whole team on the show. That thing's going to be, I'm excited. I'm really excited about this one. Everybody in the BFC Discord knows I'm very excited about this one.
This next slide, I think, really speaks volumes as well about the quality of this investment, just not only in the development process, but in the ownership and management process. So we use the top contractor in the self-storage industry, Arco Murray. We've had a lot of experience with them, very successful, no issues. They're the third largest design build contractor in the United States. So a major contractor, the top in self-storage. And when the project is completed, we use REIT management, which there are 4 primary publicly traded self-storage REITs in the United States, and they are very good at management. So when the project is completed, we will have one of them managing the project. And at this point, it looks like it'll probably be Extra Space, because as of today, Extra Space and Life Storage will have merged. And that merged company will be the largest owner/manager of self-storage projects.
Yeah, and I did ask about whether or not they're going to be able to PR with these big names using that REIT management. And the answer was yes. Think about that. And it's funny because the ticker symbol is changing to YSSS. Yes. That's amazing. It's amazing to me because you have a 6-cent stock that literally is brand new at the floor that's going to be able to associate themselves with these companies.
This next slide.
Oh no, I want the next slide, bro. So let's look at the share price of some of these companies. Now, I'm not saying this is going to happen with NUMD, but I think that this thing's going to pop off because of this. Public Storage, $291. Extra Space Storage, $158. National Storage Affiliates, $42. CubeSmart. By the way, I saw my first CubeSmart. We were driving around the other day. We passed the place. I'm like, oh man, there's CubeSmart. It's the first one I saw. $45. I'm really excited about this. So I think it's a ground floor investment. It's in the real estate space. And by the way, the ROI for storage facilities is huge. So it's the biggest division in the real estate industry. So there's a lot of money to be made. And so, if you look up Your Space America on YouTube, you could see them actually put together some of the presentations for their facilities. And it's really awesome. The fact that they're going to be able to associate themselves with Life Storage, Extra Space Storage, that's good stuff. We did start covering this at a penny. It had a nice run up to 9 cents. And, it's leveled off here. But looking at the overall scheme of things, this is the point I'm trying to make. There's not a flood of money coming into the OTC. Volume is dead. We could beat ourselves up and be like, oh, crap, my bag from 2021 is down. Some of my investments are down. You got to tell yourself, who cares? It doesn't matter, because now this is a golden opportunity to load up on real companies that are going to be able to associate themselves with broader markets. And that's going to be huge. So when we could talk about 1 cent to 9 cent, in the grand scheme of things, that's not even going to matter in a year or two, because I think this is going to be trading in dollars. This isn't a trip to dollar play I'm talking about. This is a nice share structure with a legitimate reverse merger in a really hot industry, in a division of the industry that has the biggest ROI. Think about that for a second. I would take anything under 10 cents at this point. And right now we're consolidated. It's been like bouncing between like 3.5, 3.5. I think it goes at 6. Yeah, 6.2. So, for me, that one has me jazzed up. I'm very, very excited. All right. Let me take a look here. Yeah, I don't know. I'm all NUMD. Yeah, I'm getting very excited about it. Clearly. All right. I was told you should really cover Aitx. There was a lot of drama going on the X or the Twitter for the old schoolers. And so I could go on and everybody has their own opinion. And I'm going to give my little synopsis at the end. But Steve Reinhardt, the CEO of Aitx, did release a video, and I just want to play that so that way we could sort of gauge it and address it. So let's take a look.
From time to time, somebody takes to bad-mouthing our company and have even gone as far as to say that we aren't real. Now, those that have been with us for a long time know that this happens from time to time, and it will continue to happen from time to time. But in the meantime, I want to remind everybody of some of our highlights over the years and where we're going. Let's begin.
Sorry about that. Technical glitch, of course.
From time to time, somebody takes to bad-mouthing our company and have even gone as far as to say that we aren't real. Now, those that have been with us for a long time know that this happens from time to time, and it will continue to happen from time to time. But in the meantime, I want to remind everybody of some of our highlights over the years and where we're going. Let's begin. I started this company at my kitchen table about 8 years ago, at a time when I owned 100% of the company. Obviously, I don't own that now. All I had when I started this company was 100% ownership, a vision, experience, and a little bit of money in my pocket. Today, we've grown the team to almost 100 team members, including most of the team members from 2017, when I first started hiring people, are still with us to this day. Now, of the 100 team members, about half of them are some type of software developer or some type of engineer, building and creating our own technology. And along the way, we've grown from our first garage of 300 square feet to now 3 facilities of over 40,000 square feet. We're nearing 1,000 deployed units for over 50 customers in over 30 states. We've over 15 Fortune 500 customers. We've had mainstream media coverage over the years, dozens of stories on local and national news, as well as prominent positioning in several TVs and movies. The latest movie comes out in December 2025 and is scheduled to be a blockbuster, judging by the amount of money they're spending on it. We have over 60 distributors in our network. Our recurring monthly revenue bookings are over $600,000 a month, still have a bunch of that to deploy. And the 4 quarters we've had so far of triple-digit percentage growth rate puts us easily on track to achieve positive operational cash flow this fiscal year. Our products have won numerous awards. We continue to focus on real client needs in order to innovate and deliver new solutions. Now, I don't want to get over my skis here. If we continue to add roughly $50,000 a month in recurring monthly revenue, which is more or less the pace that we've been on right now, over the next 3 years, that'll deliver an additional $1.8 million in revenue run rate per month. If we add in a pile of Romeos and a pile of Rad Dogs, maybe another $500,000 in recurring monthly revenue from those devices, all of a sudden, we're looking at an annual revenue run rate of close to $40 million in less than 3 years from now. So is someone bad-mouthing our company going to slow us down, going to take us off track? What I care about and what we are going to continue to do is drive this company forward, regardless of who bad-mouths us. Life has bumps and bruises along the way. So where do we go from here? We weather the storm of whatever sentiment is happening right there. It's not going to take us off of our game. It's not going to stop us from creating new solutions and delivering them to amazing customers. Not going to take us off from trying to fight for every sale and grow revenue faster than I projected. Let's see what happens then. Thanks, everybody.
So yeah, I mean, I think that I'll tell you right now, I love the fire with him. I do. And I'm going to give you my thoughts in a second, but like I like that he has that fire and he just laid the smack down, and it was nice to watch because people forget this isn't just about a share price bouncing up and down. The OTC market is about these small company startups. They don't grow in 30 days, in 60 days, a year. People are looking years down the road for these legitimate companies and building their companies. But I'm not gonna. I'll go on a tangent in a second. But the truth is, it's all about raising money. But all right, I'm gonna zip it, and I'm just gonna stick the script here. But let's look at what he put out. Aitx RADCAM beta testing application process is now closed. Amazing turnout from the cross section of testers we were looking for. We'll be narrowing the group over the next couple of weeks through forthcoming questionnaires. RADCAM for the win. And so what's pretty cool is that we actually we applied. The BFC, I applied to get on the list of the RADCAM, because what better way to know it's real than test the software? And you guys know, if you follow the channel, I love testing the products. I've tested a lot of the products, and I think it's just so cool. Dear Eric, thank you for your application to join the RADCAM beta test program. We are thrilled to share that we've received well over 300 applicants from across North America. We truly appreciate your interest and enthusiasm. As part of the program, we will be distributing 100 RADCAM units in the US and an additional 10 units in Canada. We expect to have all beta test units ready for delivery by the end of July. This is pretty cool. If selected, you will receive your RADCAM unit free of charge, including prepaid shipping, along with a 12-month prepaid subscription to the RADCAM service. Plus, you'll get some cool RADCAM merchandise too. Hey, Steve, if you're listening, I'll sport it on the show. Just saying. All right. The selection process will be based on your original application response and a brief survey that will be emailed to all applicants by the end of the week. We will notify applicants to their selection status in early July. Thank you for interest once again in RADCAM. Yeah, I like doing due diligence that's just beyond the interview sometimes and getting the product. All right. And he was on the BFC, and this is what he had to say.
Over the next 3 to 5 years, our world is going to change, and we're going to have AI-enabled devices at the edge performing a ton of work that has been traditionally done by humans. Now, this goes everything from, fast food workers, right? Templates of automated burger makers and so forth, packaging. What we're doing is we're bringing those same basic concepts, which I look at and are so obvious to me. The purpose of this is, number one, it's inevitable. So why not us? But over the course of this year, towards the end of this year, and really next year, as our mobility devices really hit, then that vision really starts to come true more. Of course, we're embedding large language models into our devices. But the general idea is that 3 to 5 years, we're working with machines. Machines are doing more of our job. It's more of a normal, natural occurrence to see robots and to be talking to robots.
So, and let's check out the chart. You know what? We call this thing down at 0021, and it went on a nice tear. It's had some, consolidation and pullback, but you know what? The AI industry isn't going away. All right. It's here to stay, folks. That's it. I had a good conversation actually with it was John Zadar and JRC Stocks, and we were just talking about, the various industries and the CGRA of not CGRA. I think that's, oh my God. CAGR. See, I'm getting it confused with the stock of all these big industries. And by the way, what is CGRA doing? We got to circle back there one day. But let's look at this. I mean, like it's moved up. It had a nice run. So you know what? If you got in at those lower levels, I know some of you are holding from a long time ago and you're still not happy. I get it. There's a lot of that going around, but I'm not going to take away from them what they were able to accomplish. And I did put out a poll. Are they gonna hit that penny mark? Okay, they were 100th shy of it, but that's a pretty damn impressive thing. So I'm going to get to the chat in a second, but I want to say regarding AITX, this is the thing. You don't have to like the share structure. You don't have to like the preferreds. You don't have to like the accrual-based compensation of the CEO. If those things aren't to your liking with any stock, follow your DD, follow your knowledge, and invest wisely. What I will say is Steve and his team are building a real business with real solutions. And he has been transparent. He's been consistent. So that being said, I hope the BFC gets the opportunity to beta test that RADCAM residential. and review the tech firsthand because I love to do it. And I'd be sharing that process step by step with you guys. But Steve, if you're listening, get back on the BFC so we could do a Q&A. Seriously. Let's get to the chat real quick. I want to acknowledge some people. How you guys doing today? I hope you're having a great day. It's a great Sunday, other than the crazy wind. But it has been, guys, it's been blazing hot in Buffalo. It's been nice. You know, we're going to Florida in a week. So it's like, this is a good tester for my cold Buffalo bones. If I could handle that Florida weather. All right, let's take a look at the chat. Sheldon, T-Rick, Unboxing Bastard, VC. Eric, you talk about the merger with QIND with ASNS. I think we're looking in the next 30 to 60 days. That's my hope. You know, we'll see what happens. I mean, I don't know. Mugen, Swaggy, Jess in LA. How's it going? Chuck, great to have you. Hey, it's me, Brian. There you are. John Didar. Hi, Eric. Hiya, John. Got to have you back on the show. Just checked out his show the other day. It was a great show. If you haven't had a chance, check out the Stocks Wizard. Give him a follow. All right, Jess, Patrick, you guys, Michael Singleton, how you doing? Barry the Great, the guy who brought me the play, NUMD. Yes, your Space America will be uplisted in no time. I am loving it more and more. People are loving it more and more. It's clean, you know. Lisa Matthews, she's not out busting her ass working. That lady works. You bust your butt. Shout out to you, Lisa. Seriously. It's great to have you. John Don. Yeah, no, it's great to have you guys here. Jason the Victory Meta. Great YouTube channel over there too. Give Jason a shout and follow him on YouTube. Definitely. He's big into Aitx too. He's been covering that one for a while. So if you're into Aitx, give Jason a follow. All right, let's keep this thing going. Let's have some fun. Oh, I can't wait to get to our guest today. I know we're excited to talk about a little ILIS, a little Igpk, but I'm going to make you wait a little bit more because we have some great DD. Let's do it.
Over the next 3 to 5 years.
There we are. Drcr. You want to talk about another awesome play that's putting up major revenues? Drcr it is. Look at this. All right. $120 million. All right. We're witnessing big numbers going on, and I'll show you the chart in a second. You know, rightfully so. It's moving where it should based on this, you know, all the excitement going on with this. $120 million with key net profit of $2.4 million. You know, for an OTC company, that's pretty damn good. Pretty damn good. I'm excited about this one. I'm not invested in this one. I'll show you where I called it, and I wish I would have done what I brought you guys, and some of you did, and some of you are very happy. But I love this company. I love watching what they're doing and watching how they're growing. And I'll tell you, it's not just about investing for me. I like to see success. I like to see these companies become successful and do great things. You know, let's move on. There we are. June 10th, Swifty Global has officially been granted a South African gambling license by the Western Cape Gambling Board. This milestone allows us to operate in the booming $1.8 billion market. All right, NASDAQ uplist soon? Hopefully. NYSE American? Who knows? And, you know, they did announce their record-breaking annual results for 2023 with revenues of $128.9 million. The company is now gearing up for a major uplist to a national exchange. Dive into our full press release below. Well, let's look at some of the key points from that press release. The impressive results from 2023 have provided Swifty with a solid platform for transitioning to a major national stock exchange. And following today's record results, Swifty is pleased to announce that it is in the final stages of discussions and negotiations to enter into a reverse merger with a company listed on a national exchange. All right, let's go down to the last paragraph. We are incredibly proud of what we've accomplished at Swifty as we publish our 2023 annual disclosure, achieving record revenues of $128 million with minimal debt. Key, minimal debt. It's a tremendous testament to the exceptional effort and dedication of our team throughout the year, who have helped to secure the significant achievement. This success has helped to solidify a healthy balance sheet and places us in a very positive position as we look to finalize what will be one of the most significant moves in our company's history by uplisting to a major exchange. This move will unlock additional value for our shareholders and provide us with the resources needed to deliver the next phase of our growth trajectory, commented James Gibbons, CEO of Swifty Global. And I think that I can tell you right now, I think James Gibbons is an awesome CEO, and I think he's doing it the right way. But man, what great stuff we have going on with DRCR. And there was some information out there about like you got to look at the preferred shares and they convert into billions and billions and billions of shares. This guy's not going to like dilute this stock, to oblivion, achieving 128 when you're talking about 2.5 plus million or whatever in revenue or in a net profit. He's not going to dilute it. He has a poison pill. So if somebody comes along and tries to take over the company, he can further dilute the stock and maintain control. I believe it's a shareholder protection. What's it? Oh, I'm trying to think of the name of it. It's a shareholder protection plan is what it is. And so if I'm heavily invested in this company, that's what I want. Because, you could have a hostile takeover. You could have some really, really ticked off shareholders says, you know what, I'm going to buy it up. And then you run into a lot of problems. And it has happened. That's the truth. So it's a defense mechanism. And you know what? You want your CEO and management team to have a defense strategy. So let's look at the share structure. Yes, it's another beauty. All right. You know what? We're looking at an outstanding share count of 53 million, unrestricted 27 million, held at DTC 27 or 28 million, float 28 million. This thing's going to move hot, and it really has. I don't know what we should name her yet. I don't know. But let's take a look at the chart. I'll tell you. I'm sort of kicking myself in the butt here. You know why I'm kicking myself in the butt? Because I called the bottom. It's hard to do that, but I marked it. I won't ever take that marking away, by the way. 0.345. I could have. I made a significant investment at that point. Igpk, but we'll talk about that in a second. So it was a win-win situation. I didn't know that at the time, but look at that. Topped out at 27.40. So that is a very nice run, and this thing's just getting started. Very, very exciting. Very, very exciting. So I don't know. You tell me. What are your thoughts on DRCR? Tell me in the comments section. All right, let's keep it moving. Shout out cheers of the week. Anthony DeVideo. He's great. If you haven't followed him, give him a follow on the Twitter, on the X. He's a great kid. I met him down at the Aitx shareholder meeting a couple years back. I gotta say, you and your buddy, it was pretty badass how you rolled into that shareholder meeting. That was great. But I won't hold it against you that you're a big time Eagles fan. But it could be worse, bro. You could be like a Patriots fan. I hope I didn't lose a subscriber for that. Just kidding. All are welcome here at the BFC. But yeah, cheers to you, DeVideo. You're a great supporter of the BFC and the BFC Discord. And hey, look at the description of this video and join the Patreon, join the Discord, and join our growing community. All right, let's move on here. Let's get to it. Okay, that isn't the jubilance that is going on with the Aitx community right now. I get it. Some of you are like, gotta get this QI&D uplist going. You got to get it going. By the way, the memes, the GIFs, my favorite are the Nicolas Cage. Straight up. And this is what I'm going to do. All right. If you're on the X, the Twitter, I want you to tag at Buffalo Fireside with your favorite Nicolas Cage meme. Your favorite one. I'm going to pick somebody and I'm going to send them some free buffalo wing sauce, some Anchor Bar sauce. So tag me on Twitter. Tag me with the actual meme. Do it. All right. And here to talk a little Aitx and give us a little pep talk is none other than Jord Huggle. Let's bring him in. Jord, welcome back to the BFC, bro. How you doing?
Great, E-Rock. How are you?
Good. So I gotta ask you now, because we're here, we're looking into the crazy eyes of Nicolas Cage. What is your favorite Nicolas Cage meme?
I mean, it's kind of a tie for all of them since they're all basically the same thing. but I love them all, so I can't pick one.
Oh, it's great. I'm telling you, it's been exciting. For us Aitx shareholders, we got a chance to sit down with Nick Link and ask a lot of questions. We did ask a lot of questions. But he did have that podcast. And so I wanted your thoughts. They had this filing too. They had This is from May 2nd. This was the PR that they kept talking about. They kept saying, go back to the PR. They really, they're prideful of the fact that they have 62 million in total assets. With the net assets over 32 million in the face of exceptional challenging market conditions. They talked about, they owned it. They talked about the significant write-downs and losses during the process of consolidation in its subsidiaries and its operating businesses. These losses are a direct result of the integration and restructuring of the acquired businesses. Obviously, they're doing it. This is part of the plan. Consequently, the net operational costs have increased as Aitx strives to drive the growth of its operating businesses and complete planned uplistings. It goes on to talk about mitigate the associated costs while maximizing the value for its stakeholders. I know some of you are like, yeah, they say it all the time. Every company says that. Maximize value for shareholders. I get it. In February 2024, SAML acquired 7 emergency response operating businesses from Aitx. These are the businesses that got us interested in Aitx in the first place. So now those are now under SAML into that emergency response division. And it just goes on, 11 million and 1.8 million for a QI&D for that El Shola. It talks about that for the 2023 revenue, so they're no longer doing the Quality International thing. That thing's out the window. They're too many. They couldn't afford it. The tranche payments were huge. I'm actually glad because it's less of a mess in my opinion. So I know this is just some highlights from their last big update, PR. So Short, I just want your thoughts. I want you to tell me what you think. You're a major shareholder here. You have a lot in this company. Talk about, why are you convicted with this? I mean, why do you believe so strongly that they're going to be successful? Just give us your thoughts. Talk to your fellow shareholders, brother.
Thanks, Iraq. I mean, really, nothing's changed for me in the last 3 years. Except for the macro conditions and some things that are outside of our control. I think anybody who's been in Aitx for a while, wishes we had known the price was going to continue to go down, and they would have either held off or waited, or, possibly made some different moves. But based on the last interview when they came to see you, I think everybody was hoping for, big news, but that's not how it works. They have to, issue it through the public first, through a PR. So I think that just by them making the visit was the message, right? And so by them showing up, it was letting us know, and they can't say anything, nor would they want to, taking the risk to have something, fall afoul of the, SEC or FINRA or whoever. And so just by, being safe and protecting us and themselves and not saying anything, but then coming on the show that, JP said, look at the filings. So we basically have approximately 30 days before we hear something, I believe, with QI&D and ASNS. But for me, the strategy always was, and it continues to be, to keep buying Aitx, especially these prices, and hold it for years. Because when the first proof of concept happens with QI&D and ASNS, that's just the beginning. Then we've got SAML coming up. Then you've got Drcr coming up, which we hold their stock on our books. We're going to be getting dividends in SAML, but not QI&D. There's a lot of stuff that's going to continue to happen. And then eventually Aitx itself will uplist. So for me, I'm torn. It hurts to be down. It hurts to have the share price low, but I'm also actively purchasing tons of shares at, a cheap price. So I'm also kind of happy about it. And right now I understand people's, pain. I understand their, reluctance, to purchase more. And I understand why they're upset. But like Steve Reinhardt was saying in his video, calling a company fake that has 100 employees and that anybody who does the due diligence can verify that they're real, just really seems to say more about the person that's saying it than the company. So for me, I'm super bullish. I think we got about 30 days before we hear some big news. I don't know how the structure is going to happen, with them buying about approximately 20% of ASNS and then getting preferred shares. And then when they execute the preferred shares, that'll give them the 51% or better ownership. I don't know if that's going to be an instantaneous thing or if those shares will be locked up for 6 months. But because I'm a long-term, Aitx shareholder and supporter, I don't really care one way or the other because I was never going to sell my shares for, 3 to 5 years minimum, because I'd like to see the companies grow into something and get to the dollars and get to the larger exchanges so that we can actually get better than, small, 2 or 3 decimal, percentage gains. I want to see dividends from this. I want, just shares in 2 or 3 other, 4 other companies, and then have every one of those companies ultimately be beneficial to the other companies, because if QA&D goes up in price, well, you're going to see some kind of response with Eyeless, since those revenues are going to be reflected on Eyeless's books eventually.
Yeah, I gotta say, I know like some of you are like, all right, you asked about, are we getting QI&D dividends? All right, you're not, but I think the gift that QI&D gives is one, you can report the revenue because it's under the Eyeless umbrella, but 2, the process, because this uplist strategy that we're using for QI&D, I think they're going to use for SAML. I think they're going to use for Eyeless, and I do think that they are going to be uplisting. By the end of the year, I think we're gonna see some. Some of you are like, here he goes, crazy. He's a pumper. No, wait. I'm sorry, it's not pumper now. What's the new phrase? A fanboy? Are we fanboys? Are we Eyeless fanboys? I think we're Eyeless fanboys. But no. The truth is, I think that QID offers that process. So if they're able to, and the big thing here is if, and then if you got to be careful. There's not financial advice. If they do this, then they have access to better financing. And they're going to be able to finance these other uplists and finance the companies. We want to see, especially with SAML, right? We want to see those companies thrive. That's why we invested in the first place. Remember, you remember sitting there. I remember listening to it. You remember sitting there at that first shareholder meeting. Has the vision changed that much?
I don't think it's changed at all. I think that one of the testaments to Nick Link and the entire Eyeless team that they've assembled is how they're able to pivot with the factors that are outside of their control and continue to keep making forward progress. I know that this is probably what we're hoping happens in the next 30 days here is probably not what they initially thought they were going to do 3 years ago, but the end result is the same, which is they were always just trying to get these subsidiaries up onto larger exchanges. And so when one door shut for whatever reason, they just found another avenue, and it looks like they've been successful based on, ASNS and QA&D putting out press releases. And then if you read the filings and the rest of it, that we should hear something, like I said, in approximately 30 days. So it's not the plan that's changed. I think it's just the people, who probably aren't used to trading the OTC, especially in bear markets. Or when there's low liquidity, that this is part of my strategy. I always buy a variety of really good OTC stocks that I think can weather the storm. And then when, brighter days appear and the market, has that volume return to it and people start wanting to invest in the OTC again, I'm perfectly positioned, having been acquiring shares with very little competition. But the real question is how long is it going to be before that happens?
Yeah, and that's what I was saying. That's why I was using NUMD as an example. It's like, find the good companies that are beaten down. Find the companies that are real. Find all these things. Buy them low. And load up and just sleep on them. And we've been loading this once. I remember when I thought I was a baller, having 50,000 shares on Violus back in the day at 20 cents, 30 cents. But now, we had this retraction or whatever. I'm fine with that now because now I have expanded my position. Now we're actually looking at the real process folding out in real time for an uplist through its subsidiaries. There's amazing things happening. It's an opportunity. And trust me, like you said, of course, you want the, it's sort of like, it's bittersweet. You want the share price to be out of the gutter. You want things to be moving and grooving, but the reality is, look at the obstacle as an opportunity. That's pretty much, that's how I look at these things. And is it easy for me? Ask Jord. There's days when I call him and I'm like, oh, what are you got to be kidding me right now. And you go through that as a trader, you have to, but learning to temper those expectations and learning to temper the emotion behind it, that's key. And I'm learning that more and more that's key. So final thoughts for people watching, Jord, anything that you want to say before I kick you out of here?
Yeah, and I think it applies to probably most of the good OTC companies, but specifically Eyeless, is that, what I look for is I invest in the people and the management team There's a lot of good ones out there. I like Nick Coriano. I like Steve Reinhardt. They have the ability to talk to their shareholders, and they have a good business acumen to grow their business. And so when I look for these companies, that's what I'm looking for. And then, of course, in the due diligence process, I'm just looking to verify the veracity of their claims. Is what they're saying accurate? Did they actually acquire these companies? Do they do this? Do they do that? And the reason for that is that there's going to be these economic shifts up and down, left and right, and every once in a while events that nobody even saw coming. And the only people that tend to make it through those situations are companies with good management. So if nothing else, make sure that when you're looking for OTC plays, that you feel comfortable with the management, you feel comfortable with their plan, and that you see them executing.
Yeah. Man, excellent. Thank you so much for being a contributor to the community, a contributor to the BFC Discord. You're a great friend. We've become good friends. And it's sort of funny. I got to tell this story real quick. It all started with I would accidentally pocket dial him through the ILS Discord, and you were on the phone the one day, hey, I go, oh, sorry, I pocket dialed you. Yeah, you do that a lot. So, and we've been friends ever since, and I'll never forget that, and I look forward to throwing some wings back and some beers back with you this summer, brother.
No, I can't wait to see you. Like I said, and the whole BFC community. Thank you all for your support. And, the nice thing about this is, specifically tied to ILS, is that when QA&D and ASNS goes off, the ease for newer investors to understand the likelihood of the other Nick Link plays being successful goes up exponentially, because once they've proven it that they can do it with the first one, it makes the odds of them completing the other ones, albeit not guaranteed, a lot higher. And I think that's what a lot of people are waiting on. We still have 30,000 plus shareholders, and that means that there's 30,000 people that feel the same way we do.
Right on, brother. You have a great night. Hey, Rob, get this ILS fanboy out of here. Get him out of here. Go. I gotta have a little fun. You gotta have some fun. If you're not having fun trading and doing this stuff, then whatever. Stephanie, ever look into MNGG? I haven't. I'll add it to the list. I'll take a look into that. All right. Are we going to do this right now? We have a couple more to talk about, but are we going to do this one?
Oh, come on!
Oh boy. I know you guys have been itching for me to talk about this, and I did a couple weeks ago. Listen, from retail to the alpha investor to the financiers, there's an extreme frustration with this one. And I feel responsible to bring, to talk about this. I feel like I have to, because I've covered this one regularly over the last year and a half. I'm the one that broke open the Speed Trader story. Remember, we got Speed Trader on here, and this is how you buy a CE stock. All right. So I'm going to own it. I'm not going to run from it. We're going to talk about it. And I want to go back to the very first interview, the only interview that I had with Mark Schmidt. Brett Rosen was there too. And let's look at this clip, and then we're going to break it down. And then you guys could share your thoughts in the comments section. Many shareholders are extremely frustrated with the pink current situation. You guys have communicated with us throughout this tedious process. As frustrating as it is for us, I could just imagine how annoying it must be for your management team. What can you share with us regarding the process and why it has taken so long? And have these things been cleared regarding the preferred A and preferred C class?
Yeah. So first of all, the buck stops with me. So it's my responsibility. I take full responsibility for it. The reality is we were growing so fast. If you look back at where we were 2 years ago versus now, it's just
a different company.
It's just been unbelievable. Now, along the way, right, you try to source the best resource you have at the time to do the job you expect to be done. I can't, quite frankly, manage all of that while I'm, doing things like we were doing in, Europe this year. So things slipped, and I let some people do some things that they weren't qualified to do. Thankfully, the OTC is here to protect us all. So we're straightening that out. It's taken longer than I wanted. A and C, as I was mentioning earlier before the video here, those are shares that have been around for a long time. Like the A shares came into existence in 2003. just to put things in perspective. So the fact that I didn't have in corporate records right now the full provenance of who owns those, we knew there were 8 shareholders. I had to go through, the big we, not just me, some extraordinary lengths to try to retrieve those records, and it's taken some time. Everybody got to watch the saga of us redoing and removing the 700 million shares. This is similar, but in this case, this had to do with records that a former, unfortunately, he's passed away now, board member of ours who was responsible for that. And we had to retrieve those records. So we got them. We think we've satisfied the curiosity and the inquisitiveness of OTC markets. I do expect that this will be it. And we have, fundamental records of who's got what and where. That'll be reflected now in the A table. And again, there are 8 shareholders. And I think all the shares at this point, if they were diluted, is something like, I can't remember, guys. Just don't hold me to it. It's a little bit of shares, very little bit of shares. Just like the C, it turns out the C are, fundamentally going to be held by the universities. It looks like there's not a control person. That was another issue they had. So anyway, we've been able to get through that. It's taken some time. We've had some false starts. I quite frankly was really upset the last couple times we had to amend things. It's just embarrassing. I'm putting my signature on that. I don't want that to be the case. What we're doing now, just so everyone's clear, is we've got a new group that we are working with. There are, fundamental capabilities there that are going to get us from where we are now to SEC filing, regulatory filing. We've been an SEC filing company before. I do expect by, first, second quarter next year, second quarter probably more likely, will be audited and we'll be filing in the normal way. Now, when we do the uplift, that obviously is a fundamental requirement. So we've been working on this for a while. And, obviously the foreign subsidiaries and getting those audited has been a real challenge so that it's acceptable here. And we're working through that. And if you layer on top of that some current issues we have with needing clearances that we didn't anticipate last year that we absolutely have to have this year, it's really causing us to accelerate all of the auditing that we're doing. So we should be, I think, in the US pretty well done by the first quarter. We're going to have to make some decisions about how we maybe put some of the foreign subsidiaries in a firewall so that we don't have to worry about our clearances. More on that as we go. Again, these are real-time things that we're dealing with internally to make sure that we're actually serving the broadest opportunities we possibly can. So that's, I guess I touched on audits as well, but that's really what's going on right now. And it's taken a little more time. And quite frankly, as we've, turned the organization towards these massive opportunities, we've had to really consider how do we need to be structured so that we are capturing the opportunities that are available. And that's, again, real-time work happening.
And so that you can also.
All right. So let's look at some quotes from that, that segment. Quotes from CYBL CEO Mark Schmidt. The buck stops with me, so it's my responsibility. I take responsibility for it. I can't, quite frankly, manage that while we're doing things like we're doing in Europe this year. All right. What we're doing now, just so everybody is clear, is we've got a new group that we are working with. There are fundamental capabilities there that are going to get us from where we are now to SEC filing. I do expect by first or second quarter next year, and that was 2023, second quarter probably, more likely, we'll be audited and we'll be filing in the normal way. The last one. These are real-time things that we're dealing with internally to make sure we're actually serving the broadest opportunities we possibly can. And they've had a lot of news, but the stock isn't tradable. All right. Listen, public CEOs have a duty to their shareholders because they are legally and ethically obligated to act in the best interests of their owners of the company, which that's the shareholders. Regardless of whether you're invested with $10 or 10 million, public CEOs must be clear with you, the shareholder. And too often we see this isn't the case, especially in OTC land, Personally, I see the tide shifting because traders are getting wiser. We're digging deeper. Those fiduciary responsibilities include maximizing shareholder value through strategic decision-making, ensuring transparency and accurate financial reporting. Shareholders invest their capital, their hard-earned money, with the expectation that it's going to be used to generate profitable returns, or at least that's the goal. By prioritizing shareholder interests, CEOs maintain investors' trust and support, which is absolutely crucial for a company to succeed and to sustain themselves in the market. CYBL shareholders, from retail to alpha investors to the financiers, they deserve answers. I mean, look at the recent addition of Kim Lewis. What did management do to get her to come on board? And will they continue to add people that have government contract abilities? I mean, they're making updates, so things are going on, but it doesn't matter because you can't buy the stock. You can't trade the stock. It's in the gutter. It's not fair to the shareholders to basically, turn away from your shareholders at this point. And I'm talking about a lot of the frustration that you guys are feeling right now. This doesn't matter because you're being ghosted by management. And I feel this way about all stocks. I'll tell you that right now. I would feel the same way about Eyeless. If they ignore emails, they stop contacting, stop communicating. It's okay to fall upon bad times. That's fine. Don't ghost your shareholders. I talked to a CEO recently. I won't say who. Times are tough. Funding's tough. And my advice was this: stay consistent. That's what matters the most. Being present and being consistent. When things are great, be out there. I'll use Steve Reinhardt as an example. His share price was down significantly. All right. He still does his weekly update every single week. You'll get it from him. You'll never see him back out. You'll never see him shy away. Boom, out there all the time. That's important. Consistency is one of the most important things when you're leading a company, when you're representing your shareholders. Needs to be consistent. Yes, FLES. We saw what happened there, but he's consistent. And I like the fact that he's consistent. That matters most. I don't care if you're in the gutter for 3 months, 4 months, 5 months. Don't leave your shareholders out to dry. So I know many of you are frustrated. The buck does stop with the top dog, and I empathize with you guys. And but it is very frustrating. Hopefully we get an update. And we have something here. Brett killed FLES. I don't think he necessarily did. No, I think he paid down some debt. I think there were 3 sellers that once we got some volume into that stock, we started covering it at 3 cents, and that thing spiked up. That thing actually less than that. It was like 1.5 cents. We called it. That thing went up to 12, 13 cents. And the minute they saw that volume, those transferred shares just got dumped all over us. All right. So I think long-term FLES does have a lot of hope, especially if they continue to build a revenue and Chris Davenport stays consistent. So, I'm not here to give Mark Schmidt a lecture. I'm invested in the company. I have $18,000 invested in this company. All right. I want them to succeed. But I know every shareholder out there wants them to communicate and know what they're doing to get current. We need transparency, and you all deserve it. And because I know you guys have a huge shareholder base. We are a big shareholder base in CYBL. So that is, that's where I'm at with CYBL. I wanted to be honest and share some thoughts. And I think we're gonna just keep moving on here. And we have a new guest for his maiden voyage on the BFC to talk about Igpk. And we had a killer spaces on Thursday. It was fun, because this is very exciting, very, very exciting thing. I'm not going to make him wait any longer. Let's bring in Godfather Capital. Bring him in.
The Godfather. I love the intro, man. I got to give you all the credit for this. This is quite entertaining to watch.
Well, you know what? I wanted to save the maiden voyage for last. So thank you so much for being patient backstage. So we're going to talk a little bit about, now it's exciting because they have that amended filing. We're talking about what, 22.7 million in quarterly revenue.
Mm-hmm.
So
Yeah.
I'm gonna give the floor to you, and I just want you to share. I know you have you could share your screen if you need to, but talk a little bit about the filing. Talk about some of the things of why you're excited as an Igpk shareholder.
Okay. Yeah. So talking about the filing first, I mean, it's been quite a journey. So the company, well, JFH, they acquired the Igpk shell back in November, right? And so what they've been doing for the last 6 months is really catching up on the filings, just so for them to become current. You know, just the last month alone, we were this close from going to the expert market, and that was just because they needed to catch up on the previous annual report and getting all the quarterlies done, right? But they managed to get through. There was a little bit of an issue with the last quarterly report, right? Because they had until 5/20, until May 20th, to get it updated, or else they would lose their recently acquired pink current status. And so what happened there, and what they admitted over the interview that which you hosted, and it was quite incredible, was that they were not complying with U.S. GAAP, so generally accepted accounting principles. And it was more based on their Chinese accounting. And so what they did over the last month, and how we got to the amended quarterly filings, was now with that accounting principles aligned with the U.S. GAAP. And so what's good about this is that the revenue actually increased from 5 million to 22.7. So that is a pretty significant increase, and it only happened on Thursday. And so we're still coming to our senses of what this means. Overall, based on what I gauged from the market sentiments, is that everybody's pretty excited about it. They're pretty happy. So I'm overall pretty excited about the company, just because this is just one of the 8 entities that they mentioned. JFH is a really big company from what we're seeing. And if this revenue is true, that means they're generating a revenue run rate of approximately 91 million per year on just this one entity alone, right? So when they roll in the other 7, you can only imagine what that's going to look like. And the CEO himself said that this is his company was valued at 1.5 billion. I'm pretty excited about that.
Absolutely. Somebody was asking about profits. You know, what were profits? And now the profits were low.
Yeah.
So, I mean, what could you say about that? And I mean, is that concerning to you?
Yes and no. If the profits stayed where they were, I would be concerned. But what I'm speculating is that either A, they don't have all their accountings lined up yet, or B, the profits are being rolled in or were tied into other entities, or C, they're more likely spending a lot of their any of their gross profits on R&D, marketing, sales, and other things. So typically when a company is growing, you want to spend all that money up front to get your name out there, especially in China, right, to grow, and then churn that into a profit, you know, and then at that point say, okay, we're at a steady state. Let's see those profits now. Right. So, but usually, but this company's only been going on for, I think, about 5 years.
5 years. This is year 5, and they said that they're working to list. And you know, we've saw the videos of the presentations and the listing ceremony. I mean, that place was packed with people. I mean, this isn't. And you know, we are going to have some. By the way, and listen to me carefully. We had the space. We're going to have boots on the ground in China, and we're working on a second interview. With the Jun Wang. So I think it's going to be crazy. I mean, that was honestly in the podcast career, that was a moment for me, dude.
Oh yeah. That was truly mind blowing. And I would highly recommend anyone who hasn't seen it to watch it, because quite honestly, that was one of the best CEO interviews I've ever seen in the OTC.
It was wild, but continue on. Could you talk a little bit about the share structure? You know what? Looking at the share structure, it looks bigger. You don't think it's going to move much, but this thing moves hot, which leads us to believe. And I'm going to let you explain this. That a big percentage of this float is locked. So talk a little bit about that, sir.
Yeah, absolutely. So I'll take you through the filing now. So there's 18 pages. I won't cover all of them in detail because I don't think we have enough time. But what I will do is cover some of the key highlights, right? So right now the company stands at 4.5 billion outstanding shares. That was a 500 million increase from the last quarter, or from the end of the year, and that was really tied to the acquisition. So what ended up happening was the CEO acquired 1 billion shares, and then Charlie Wu acquired 500 million, and Charlie Wu is an insider. Both those shares are restricted. Right, so that's 1.5 billion. However, they also cancel shares from the previous owners. On top of that, these are restricted shares. So if you take that into account, just between them two, they have approximately 33% of the outstanding shares, and that's locked up. That's restricted from as of now, and including other insiders. Well, not really insiders, but services hired like Brian McLean and others. The unrestricted really is closer to 2.3 billion, 2 billion shares. And so it's only really half the outstanding shares that's tradable today.
That's impressive. Yeah, just keep going. The floor is yours, sir.
Okay. So,
and by the way, you have as much time as you want. I'm not going to rush you. I know I said let's talk about 5 to 10 minutes. But I said 5 to 10 minutes. Well, you saw the spaces. Let's have a quick 15-minute space turned into like an hour and a half or whatever. But the floor is yours. Have at it.
Okay, so that's really the first page. The second page, nothing really here. Of course, there's the new company address. So page 3, page 4, this is where they get down. They break down the preferred shares. Nothing really interesting here that I saw. Where it gets interesting is in page 5 and 6. So this is the outstanding shares and who has what was issued when. What I typically look for in filings every quarter is really at the start date. And so as of January 2024, there was really only one new issuance, and that was $500 million for JFH and Charlie Wu, which are in fact restricted. And also, of course, when they acquired in November of last year, that 1 billion shares to the CEO, Wang Dijun. Going to page 7. So this is where I was talking about the percent ownership. You can see that Wang Dijun owns 22.21%, and also Charlie Wu owns 11%. So that's typically 33% locked up. And then you got other folks as well and other insiders. Jumping into page 8, nothing really exciting here. Besides, of course, Eric Newland being mentioned as the Securities Counsel. Page 9, nothing really interesting. Besides Wei Ji being mentioned as a CFO. And I mean, why I find this exciting is because it does show the connection between what Long Bully and a couple other folks have shown through the due diligence, that these guys are the executives in the privately held entities under JFH. So making that connection was really what sold me at first. And so seeing this on paper really confirms or starts confirming a lot of the due diligence that was done over the last couple of months. Page 10, nothing. Page 11, just the issuer certification. And then this is where it starts getting interesting. Starting on page 12, looking at the balance sheets and cash flows, right? So in terms of their current assets, they have $3.9 million $3.9 million with an additional $560,000. So total current assets at about $4.6 million. Right, that's really cool. That's significant to shareholders because they don't need to dilute shares or for their ongoing operations. They have cash on hand to expand, to grow their business, to do all sorts of stuff without the expenses of shareholders. Additionally, what you might also want to take away from this is that the authorized share is currently at 4.6 billion, and the currently outstanding share is 4.5. So they don't even have room without increasing the authorized share. So dilution for me is really out of the picture without there being some sort of corporate action to show it forward. But anyways, just moving forward in terms of liability, nothing really significant. It's really more tied to the stockholder deficits, which is not really crucial to their operations. Moving on, so page 13, I think this is what everybody's really excited about. So here's where they show the revenue of 22.7 million. Of course, gross profit and the COGS of 22 million. So really, they're only generating gross profits of 700 million. I'm sorry, 700,000. This
that would be nice, though.
Yeah, I mean, profit is profit. I do think this is the first time. I think there were potentially other reasons why they're not showing higher. One of the things I think might potentially be off a little bit is their general and administrative expenses, which could be right. This is typically your overhead, your employee salaries and stuff. And so with the amount of employees that they have, I figured, this could be a little bit off balance. But overall, I think they are capturing their costs correctly. So what I'm going to be looking for the most in the next quarter is see how these numbers change. But overall, I'm still very impressed. What I care most about a startup company is showing strong revenue numbers and then catching up to profits. So Q2, Q3 is really, Q3 is what I'm most excited about, but I do want to see some improvements in Q2. Okay, so jumping on to page 14, nothing really exciting. 15 is just the cash flow. So this just shows you how they got to these numbers in the balance sheet. So you can see the net change in cash again from 3 months ended in last year. This was when it was still a shell status, I believe. And so you can see what the changes there are from the company. And then page 16. So this one I think is a little bit interesting. I saw someone mention this on X, and I did want to address it. Was regarding their preferred Series A shares. So they're showing that at a potentially dilutive security, it could translate to 50 billion. Yes, if you see this at face value, okay, you might be concerned. But generally, preferred shares, especially preferred A shares, those are more for controlling interests of the company. So regardless of what happens in the future, they want to maintain control. They want to maintain voting power to address the company. So that's typically why I've seen companies do it before.
Would that be similar to what I was talking about earlier, correct?
Yeah. The only time you would be concerned is if they increase the authorized shares and then start increasing the outstanding shares. At that point, you've already spooked your shareholders with 50 billion. But of course, right now, it's not something I would ever be concerned about. And then finally, I think just on page 17, and this is the last page, this was just talking about, when everything transpired. So you can see the acquisition of the e-commerce platform. This is just one of the 8 entities in which we're showing the revenues for. That happened on January 1st. But effectively, on November 28th, that's when they actually acquired the company, and they did some cancellations of the previous owner shares. And so that's where all the transfers happen. But anyways, that's really all I got for the filings.
That's awesome. Guys, I want you to do me a favor. If you haven't followed Godfather Cap on Twitter, please do so. And I want you to do me a personal favor. You're host of BFC. If you're watching on Twitter, I want you to get on my YouTube page. Let's hit the 3,000 mark by the end of summer. I want to build the community. I want to build that YouTube mark. I want to get the 3,000. So I am asking you guys, please get over there, subscribe, and yeah, I don't put out like 5 videos a day. So, and hey, you could always turn off the notifications, but I suggest you turn them on because we have a lot in the works here. But get over there and subscribe. If you're watching on Twitter, hit the like, hit the heart. Just hit the heart, for crying out loud. Let's keep building and growing, because I love sitting down with people like Godfather Cap here. I mean, to be able to break down these filings for us, that's what it's all about. There are so many aspects of DD that we're doing. And, I've talked to you before. It's important. It's just not about the chart. It's about the catalyst. It's about the filings. It's about the management structure. I mean, there are so many aspects to it. Somebody put out a poll, and I was going to pull it in today about, what's the most important thing you think of? I'm not sure if you saw it or not. I think it was, MVCO CEO, Ryan Shadell. I think he put out a cool poll basically saying, what do you look for in an OTC? Fun or hype or management? Well, I got to ask you, what's the one thing that you look for in an OTC company?
Me personally, I love to see a good business model, but most importantly, it's got to be something disruptive. I don't like really commoditized products. I don't like seeing services. I like seeing something that's really more in the transformational space, right? So anything artificial intelligence. So next cutting edge thing. And I think an e-commerce platform, what they're doing at JFH, is pretty exciting because they do have a business model that's pretty unique. I didn't really get a chance to talk about it here. You did a much better job at your previous interview, but their business model of, rewarding their consumers with shares in companies, something that's really I've never seen done before. I think it's a very exciting model, and it's pretty unique where they could, compete with Alibaba and Amazon one day. So those are the things I love the most about, tracking OTCs, is those diamond in the roughs with a lot of potential.
Yeah. And you know what? This is the most real Chinese merger I think that we've seen ever. It's crazy. And to connect with somebody halfway across the world and to look at their videos and the community here and the due diligence that's been done, it's just second to none. And you mentioned Long Bully Stick, Master Picks, all those guys. I know I'm forgetting some people, but everybody. Super Robot put out an amazing video, when that thing happened, and it's man, I watched that thing 4 times.
Oh, I'm still watching it today. I think I'm gonna watch it.
It's wow, this is freaking awesome. And so I literally was in my classroom on my lunch break. I will say I was on my lunch break watching it on the big screen. But no, it's exciting. This is exciting going forward. We're gonna see where it happens. I'm not looking to sell. I'm looking to I'm a part of the journey. Let's get on that roller coaster. We're on it, man. And
Let's go.
It's exciting. Let's go. Let's go. That's where we're at right now. So I want to thank you for coming on the show. I definitely am going to have you back on. Your wealth of knowledge, and I appreciate everything that you've done for the OTC community. And stay strong, man. Yeah, that's right.
Thank you for having me, Eric.
Just don't give me the kiss of death. I'll take one on each cheek. All right.
All right. Take care.
Get this guy out of here. Get him out of here. All right. We have 581 people watching live. Hit those like buttons. Hit the hearts. Hit subscribe. Join the BFC. We're not stopping. Next week, Sunday, is going to be our recap show. We're putting together, it's going to go live, but we're actually putting together a bunch of segments from all of the interviews that we've done in Q2. Lots of due diligence there. This is exciting, guys. And guess what? When Q3 hits, we're going to just keep on bringing it. That's what we're doing it. DD from the source. That's it. I think it's time to fire up the grill. I hope you guys have a great day. And remember, there's more that binds us than breaks us. Peace out, guys.